Yeah, so went to Africa because I'm from Africa. I've spent my whole adulthood in America and just wanted to see what that's like, and that was the main reason I took it. In addition to being part of a small team, launching the fund, driving culture, seeing buyout and growth across many industries, that's why I went. But what did I learn? Africa, emerging markets, right, are not necessarily higher return than developed markets. So people, yes, it's a growth market, but several constraints placed up by the large investment firms that have funds invested in Africa and by the competitive dynamics within Africa for within those investments that fit the constraints actually make the returns very similar or sometimes even slightly lower than Western markets returns. That doesn't mean that Africa plays no value in an investor's portfolio, because it does provide uncorrelated returns. So I think the conception that it's going to be a 5x is actually inaccurate. That's one thing that I learned when there, that it's more about diversification and building a robust portfolio rather than outsized returns. To get outsized returns, which takes me to the point on constraints, you have to loosen the constraints, right? You have to be good at embracing complexity and have stamina to create the non-obvious opportunity. Like businesses in the West here are in their corporate form already. In Africa, you might have to piece together 20 subsidiaries into one entity that you can invest in. So be good at embracing complexity and be cognizant of and do work on the macro in your country you invest in. And not just in your country, but in any country whose macro could affect the macro in your country. In Africa, for example, you have to be an expert on what's happening in the Chinese economy, lest something happens there and oil prices go down and copper prices go down, which they did, which could harm things in your economy. And check for distortions in the context for firm rivalry in your industry. In the United States, for example, antitrust, anti-competitive practices are prohibited here. That's not the case in many countries. Sometimes the earnings and competitive position of your company might be supported by distortions. Make sure you understand that. Be really comfortable with the people you work with. The people you work with is even more important than here in the West, just because there's a risk of being misled. So be really, spend time also working diligence in, like I know in the West, when you do your deal, you do a background check on management, pay more attention to that. And you won't know everything because the data is not existent in many cases. So be good at not knowing and structure your investment to protect you from that not knowing.